there was a template for this. This is not our first time that Trump has been our president. I think this time, though, he's been a little more unfettered. I think in the first administration, it was more of a range of getting to know the job, getting to know the position, working with some different people who sort of were foisted upon him because he didn't come from a government background. This time around, I think it's much more of a team of loyalists. And as a result, his messaging is more unfiltered. The problem with that being for markets, or the benefit for that for markets, depending on your point of view, is that leads to volatility because the messaging can change dramatically. He can move around his positions. Sometimes, even within the same sentence, they can be contradictory. And so I think, we're back to this environment where we have to be monitoring the news flow almost constantly because, it's a little bit different than in most administrations. President Trump starts talking, it can go in any different direction at any moment, at any time. That is one of the things that I think will keep us in a higher volatility environment for some period of time.
Have Trump's autocratic tendencies affected the market?
Well, absolutely. I mean, you just have to look at the lead up to the tariff announcements and then the aftermath of the tariff announcements. We sort of heard that these announcements were coming. We knew to expect something on April 2nd. We didn't know exactly what to expect. What came out was worse than expected. And in many ways, once you started to get into the numbers and the specifics, it was almost haphazard, certainly strangely thought out, let me put it that way. And then what we got was was basically the president digging in. And, people remember, at least in his first administration, that he was very much one of these people who viewed the markets as a barometer for his economic policy. How's the market voting on his economic issues? But his first reaction was just to dig in harder and pretty much imply he didn't really care what the stock market was doing, or the bond market for that matter. Then there was an abrupt change of tone, and that led to an abrupt rally in the markets, and after a couple fits and starts, a big rally there. So the messaging has changed quite a bit. Just even from the point of view of trying to get used to the tariff situation and how they play out, any of this can change. So an autocrat is much more free to change his mind than someone who governs by consensus, and he doesn't seek consensus. And so as a result, you don't have the process of consensus building. You have policy that's thrust out there. And sometimes if it's viewed as too extreme, it gets walked back. Other times it gets dug in. This is just a different way of doing things, but it has effects at the macro level.
Will the new administration attempt any crypto regulation?
I think there was a lot of hope from the new, coming into the new administration, that there would be some regulatory clarity about cryptos, and that could make them a more mainstream instrument. Think about how this evolved. It was basically the world of penny stocks, or something worse when crypto first came out. Then as it got bigger and more accepted as a means, certainly of transaction, if not as a means of financial transaction, not as a means of actually a currency or anything of that nature, there became some desire for at least the bigger ones, Bitcoin, Ethereum, et cetera, to see some regulation. You can look at it now as almost the difference between, an NYSE or a NASDAQ listed stock and a pink sheet listed stock. Except the problem with the pink sheet listed stocks, as it were, the meme coins, the secondary stuff, they allow the appearance of impropriety, if not actual impropriety. I'm not going to accuse someone of impropriety on your podcast. I don't want to get into those grounds, but I will say that it allows the appearance of it, and that's certainly not good for anybody involved, regardless. And the idea that it could be used as a means around the emoluments clause, let's say, that's certainly, again, I'm not going to accuse that, but this is the stuff that needs to be whiter than white, and it's definitely got a lot of shades of gray, shall we say.
What are your thoughts on the pattern day trading rule?
I know it's not a popular rule among many. I think it points to the differentiation between the governing bodies that govern our industry. The CFTC tends to take a more lax view of that sort of regulation. The things you mentioned that don't seem to have a problem with it tend to be CFTC regulated. The groups that do, the groups where the regulation, FINRA answers more to the SEC than the CFTC. And so I think that may change with the new administration. It's too early to know where that goes. I think with any well-intentioned rule, and I do believe that the pattern day trader rule is well-intentioned, I think it is. I think if it avoids the potential for impropriety, the potential for margin violations, intended or unintended, it's a pain in the neck for a lot of people. More regulation typically is viewed that way. But I think if you're going to have people get into trouble more, can someone be trading ES and NQ as a pattern day trader and get themselves into trouble? Sure. Are they more likely probably to do it in a securities account than a commodities linked account? Yeah, probably. With doing, trading SPYs and Qs, let's say, heavily levered and in a pattern that's day trading. And you could also argue that there's limit. What's the economic value of it? As we've all gotten along in the industry, and neither of us are spring chickens, unfortunately. The line between investing and or risk transfer vis-a-vis gambling has gotten increasingly blurry, shall we say? And I think that it's helpful to I think the day trader rule attempts to try to find a delineation between the two of investing vis-a-vis just back and forth trading. And there are people who do it, and I was a market maker for decades. And so, but that was under a very specific set of rules in a very specific environment and a very specific mentality. I do believe 100% that my basic role was to provide liquidity in the marketplace. I don't know that pattern day traders do that. And certainly they're not bound to making markets continuously. So is like any rule, is it perfect? No. Do I respect what it's trying to do? Yes. And I'll leave it for the rule makers to maybe, if they want to come up with a better alternative in cooperation with the industry, let's work on that.
How are you trying to use prediction markets?
The good aspect of prediction markets are, at least the stuff that we tend to do on Forecast X, is there's an economic rationale for what we're doing. These are events that have influence on the market, but are not specifically. There aren't otherwise securities or commodities that deal with this. Whether you like political prediction markets or not, elections have consequences, and there are definite winners and losers from a market point of view, depending on who wins and loses an election. Economic numbers obviously move markets. You can sort of, but any hedge that you would take in the marketplace is somewhat of a second order hedge, right? So if you have a particular opinion on the non-farm payrolls number, yeah, you can buy or sell stocks or stock futures, you can do options, you can do it in, bonds, current, credit, et cetera. This is a direct way for market moving sensibility. Other stuff, like climate and some other things, these again, they have economic consequences.